Why? All right, there we go. All right, let's try this again. Hello and welcome everyone to part 2 of our Back to Basics webinar series. I'm happy to be here with you all today on a lovely Friday afternoon with not just a webinar today, but an extra special surprise. Many of you that follow Sectors Made Simple and some that don't follow Sectors Made Simple might remember the name Julie Stav. She is my mother, yes, but she is also part of Sectors Made Simple, and she's coming back. My mom, Julie Stav, will be coming back to work with Sectors Made Simple, launching her own webinar series with us. So, starting in May, we're not sure the date yet, more news on that to come, but she has lots of awesome information planned for you all. Strategies and interactive ways to trade so that you get hands-on practice with what you're learning in those classes, all in a way that is fun and safe for your money. So that class series is going to be coming in May. We'll be meeting every other week, so 1 week on, 1 week off, and is included for free for Sectors Made Simple subscribers. So if you're already a Sectors Made Simple subscriber, congratulations, you get that class series. If you're not a subscriber, now would be a great time to join the Sectors Made Simple community as a subscriber to not only take advantage of over 80 hours of members' webinar content, but get access to this new class series live as well. All of these webinars will be done live, just like the one that you're watching right now, so that you get to follow along in person and ask questions, get answers, and learn alongside her as we all start to understand how to trade not just week to week, but day trade or trade quickly in a way that's easy and simple to understand and even easier to use. So that's the last you're going to hear from me. I'll talk about this again at the end for people that might come late, but you get to hear more about it next week from Julie herself. So I hope you all are excited about that news. Julie Stav is coming back. She's going to be doing a class series with Sectors Made Simple, and that class series will be included with your Sectors Made Simple subscription. So, with all of that announced, let's get into today's webinar. Today's webinar is going to be on relative strength basics. We've talked about this in the past, and relative strength is very important to the relative strength matrix, but I want to make sure that we understand exactly what it is, not needing to get a PhD on it, instead understanding what it means for the matrix and how it helps us to understand the market. As we have been doing with part 1 of this series, today we're going to have a question of the day. This is not a question we're going to discuss right now. If you want to hear my answer as well as the answers of the community, stay tuned to the end of the webinar where we will have that discussion. But to get your mind started on the question, or if you're watching this recorded, if you want to put your answers down in the description or in the comment section, today's question is, what relative strength chart do you think is important to follow? So that's the question of the day. This is a Sectors Made Simple webinar, and let's get straight into the action. So today's webinar is on point and figure and relative strength basics. And the questions that we're trying to answer, again, for this series, I want it to be very targeted to helping you to use the matrix simpler. So today's questions, there's 2. 1 is, what does the colored boxes on the matrix mean? These dark red and dark green boxes and these lighter red and lighter green boxes. What do those mean? And what does pause, trend, and X count mean? Those have meanings, and today we're going to talk about what they are. A really quick recap on what we talked about last week, just in case you weren't here or you want a refresher. We talked about point and figure charts. This weird game of tic-tac-toe that shows price changes over time, but more importantly, shows us periods where price changes in a way that is interesting to us. We only add new X's or O's when something happens, so periods of nothing we don't care about and is not shown on the chart. If you look at this chart, it might be a little small, but I'll circle around where it is. Right here where the cursor is, that is 2020. That is the start of 2020. Of course, 2020 was a crazy year for the market. So everything between there and here was 2020. 2021 was from here to here. So 2020, a lot happened, so there's a lot more stuff for 2020. 2021, not as much happened, so there's fewer bars. Detail where you want it, skips over the things that we don't care about. And just a quick refresher on how to read these charts. Columns of X's are positive price direction. So the price is going up when it's in a column of X's. A column of O's is the opposite, where the price is going down over time or a negative price direction. To add another box, so to add on to where we already are, so add a new X to a column of X's or add a new O to a column of O's, it needs to just enter a new box. To switch directions, we need 3 boxes or more of change. So if you notice, the smallest of these lines is only 3 boxes. That is the least number of boxes that we can have in a column. Let's now get into relative strength charts. Relative strength is not a type of chart, it's an idea. It's a way of looking at prices. It doesn't have to be point and figure. We can chart relative strength on anything. But because of something I'll talk about later, we're only going to be using point and figure and talking about point and figure relative strength today. Relative strength, the name really tells you what it does. It is relative strength. It compares the price of 2 securities, be it stocks, ETFs, stocks and ETFs. And these charts show us what's called the ratio, or how much one thing is compared to another, and follows that ratio over time. Let's look at this really quickly. Let's get into some examples so that we're not just staring at lines of text on a sheet. We can talk about real-world examples of this information. So let's talk about how we would find relative strength. First, for relative strength, we need 2 things. What we want to look at. So in this case, we're going to look at XLK, which is technology. Then we want to say what we're going to compare it to. To tell stock charts or whatever we're using to look at our charts that we want relative strength, we use a colon. Those little ... That says we're doing relative strength. So we say what we want to look at, ... what we want to compare it to. So in this case, what we are looking at is technology compared to materials. XLB is the S&P 500 ETF for materials. So it's technology compared to materials. And we take these two securities, these two ETFs in this case, and stick them together. And it gives us one chart. It's going to be a little small because I need to have other stuff alongside it. But let's go to stock charts, and I'm going to first show you the big chart. And then we can talk about what we're looking at on the slides. So on stock charts here, we can type in XLK because that's what we want to look at. Colon XLB, which is what we want to compare it to. When we hit enter, we see that we get a single chart for those two securities. It looks like a normal point and figure chart. You've got numbers on the right and the left to show value. And you've got your columns of X's and your columns of O's. Columns of X positive or upward direction. O's downward direction. It's a point and figure chart. But there's a few differences that we need to talk about. First, those numbers that you see, 166.87, I'll tell you what, that's not the price of technology. That's not the price of XLK. And that's not the price of XLB. What that is it's a relative strength value. Price might not be the right word. Value is the best way to think about it. So to find the value, the relative strength of value here, we need to take the price of the first thing and divide it by the second and multiply it by 100. Let's use our example here again of XLK to XLB. The first is what we want to look at. So XLK, we're going to bring down here. Then we want to divide the price of XLK. We're going to take that little dot dot and turn that into our divide line. And we divide it by the price of XLB. Then we multiply it by 100. Now that we've talked about that, let's pull up the matrix really quickly. And under sector ETFs, we can get the price for materials and technology. So technology is 143.08. So here we're going to go in and we're going to do the price of XLK divided by the price of XLB. XLK is 143.08. Oops, typing is difficult. And the price of XLB is 85.74. 166.87. Now, we multiply it by 100, and that gives us 166.87 or 88 if we're rounding up. 166.87, 166.87. Our price on a relative strength chart is just that. Our price is the value of what we're looking at divided by what we're comparing it to. Then we chart it. That value, that ratio, is going to change every single day. So we follow that ratio over time, and that's how we end up with this chart. It is that price of what we're looking at divided by what we're comparing it to every single day. And it gives us a point and figure chart. Now, with this chart, we can start to get information out of it that we can use to invest. The first thing we can do is we can look at the direction. Direction is really easy to find. Is it going up in a column of X's? So in the case of this chart, it is. Or is it going down in a column of O's? Like this chart. So you tell me. Let's pull up this chart and you tell me. Are we in, what is the current direction of this chart? Is it in a column of X's going up or a column of O's going down? It is indeed in a column of X's going up, because the column on the far right, which is the newest stuff that we have, remember, just like we read a book, we go from left to right. So the far right column is the most recent. So in this case, we're in a column of X's going up, and that's our direction. Really, really easy to look at and see right away when you're looking at a chart. Let's do one more example just for fun. Let's compare SPY to technology. So again, we want to compare SPY. We want to do a relative strength chart, so we put our dot dot, and then technology is what we're comparing it to. What is the direction of SPY compared to XLK? While the YouTube land thing catches up, we're going to keep going along here because I know you all are going to get the right answer anyway. So let's move further. But before we talk about the second part of relative strength, we need to now talk about point and figure buy and sell signals. Everyone's getting the right answer. That chart is currently in a column of X's going up. But direction is just part of a relative strength chart and really any point and figure chart. So we need to talk about buy and sell signals before we talk about the second part. So let's do a little lesson on point and figure buy and sell signals. A buy signal is really simple to understand. It's when a column of X's going up goes above the previous column of X's. What happens is a column of X's, think about it like real prices. The price goes up to, say, $100 and then goes back down. When the price starts getting back up to $100, people are starting to look at it saying, it went back down last time it was at $100. Is it going to do that again? If it does go back down, it doesn't surprise anyone. We all knew it was going to go down. We knew that. But if it goes above $100, now that's something interesting. Our brains, humans, we think compared to other things. When you're looking at gas prices, $5 to $5.05 is not going to make much of a difference in your brain. I bet we all wish that gas was still $5 a gallon. But $5.95 compared to $6, it's still only 5 cents. But that 5 cents makes a lot of difference to you and to your thinking. That's the reason why when you look at the price of something, it's going to be $49.99. Because to you, $49.99 is only a cent cheaper than $50. But it's not $50. The next time you go to a gas station, look at the prices. It will be $6.49, but not just $6.49. On the left side of that chart, or the left side of that price, it's going to say and 9/10 of a cent. It is so crazy how much our brains think that that is less, that they make the price $5.49 and 9/10 of a cent. So now we're not even saying $49.99 to $50. We're saying $49.99 to $50. Again, the next time you go to a gas station, check that out. It's pretty wild. And once you see it once, you'll never unsee it. Stocks work very similar. If we see the price goes up to $100 and then goes back down, the next time it goes up to $100 again, we're going to be sitting there wanting to know, is it going to go above 100? And when it does, it's called breaking a resistance barrier. We think of it where we might not know that there is a resistance barrier there. But if the last time the highest it went to was $100, you bet the next time it's close to $100, everyone's going to be sitting there waiting. What's it going to do? That's a resistance barrier. For example, take this chart on the right. The first time on this left column, the price went up to $166. It then reversed into O's, down into the box with 160. What this does now, we now have that first column of X's, which creates our resistance barrier. It's the ceiling. So we can draw a ceiling above that column of X's. Now, a buy signal is given when the price goes above, it breaks through that barrier. So when the price goes above 160, in this case $168, because that's the next box above, that would be our buy signal, or what's called a double top breakout. We have the same thing for sell signals. When a sell signal happens, it's a column of O's going below the previous column of O's. So I've put 1 down here, and in this case, we have a resistance barrier, which is the roof, and a support barrier, which is the floor. So when the price hits the bottom and then bounces back up, we know where the floor is. Now when it goes back down again, if the price falls below that resistance barrier, or that support barrier, that would be a sell signal. So using our example, the price goes up to the $92, so over here in the left, goes down to the box for 89. It goes back up again, which creates a resistance barrier below that $89 box. So a sell signal is given when it goes below the $89 box, or it hits that $88 box. Now, if you notice, this is one support barrier on this chart, but there's another one as well. Right down here, below $83, there is another support barrier. where when the price fell below $82, it had another sell signal. All right, now that we've talked about buy and sell signals, let's go and do one or two examples before we get into how all of this relates to relative strength. So let's go and look at technology. What is the most recent signal? I'm not going to let you cheat. What is the most recent signal on this chart? Is it in a buy signal or a sell signal? Again, the most recent thing that we have is on the right side. This current column of O's happened today, and it went below the previous column of O's. So it's now on a sell signal, which we see up here told to us as a double bottom breakdown. That is our sell signal. Let's go and find something that's on a buy signal. To do that, I'm just going to look for something on my other monitor, just so that I don't need to be going through charts randomly. I'm going to cheat a little bit. Okay. When the computer decides to work with me. All right. Let's go and look here at Abbot Laboratories. What is our signal here? Well, actually, I kind of ruined the surprise because I told you we're looking for one on a buy signal. But let's take a look at this chart. Starting in February, it went down here and went below its previous column of O's. So in February, it went into a sell signal. And this is a great example of support and resistance barriers and how real this is. There's a lot of stuff that you learn in school or in books that it's fantasy land. It doesn't happen in real life. This stuff does, and that's why it's fun to learn. This really happens, and here's a chart doing it. So in February, it went down and went on a sell signal. It then went back up, creating a support barrier at $114. It went up just below, it went to the box of 122, then reversed again, back down. It hit the support barrier again, but didn't break it. It went back up again, hit that resistance barrier again, and went back down in April. So it went support, resistance, support, resistance, back down, and then finally on April 20th broke out. So it broke its resistance barrier above. Pretty cool, right? This is a perfect example of how prices will bounce between these points. Both support and resistance barriers will happen at the same time. And this is not rare. Look right here. Here's another example of that happening. It went up, back down, up, back down, and then finally broke its resistance barrier. This is not some textbook example. This is a real stock with real prices. This stuff actually happens, and it's super, super cool because it's just the way people think. We think in terms of support and resistance. And when something changes, that's why these buy and sell signals are valuable to track. It means that something has changed, and we want to know what it is. That is point and figure buy and sell signals. Let's now go back and take a look at why all of this matters for relative strength. Because when we're looking at point and figure buy and sell signals for a single stock, those names are very accurate. It's a stock if it's on a buy signal. If the chart says it's on a buy signal, the technical side of it says buy. Again, not a recommendation to buy on a buy signal. We're saying strictly the charting would say it's in a buy signal. In this case, XLK to XLE, you can't buy a relative strength chart. You can't buy relative strength. So we don't want to use the names buy and sell. It's a little confusing. You can't buy it, you can't sell it. So we use some different words. Positive for buy, negative for sell. So this chart right down here had a resistance barrier below 152, broke out above that resistance barrier, so it is on a point and figure buy signal or a positive trend. So instead of saying buy or sell, we're going to say positive and negative for the trend. Here's an example of a point and figure sell signal, where the chart has a column of O's go below the previous column of O's. This would be a point and figure sell signal, or for relative strength, a negative trend. So now we have two things for every single chart. We have the X or O direction. So is it in a column of X's or O's? Tells us the direction. Where is it going? And we have positive and negative trend to tell us the more long-term buy or sell signal of that relative strength chart. Let's go now and look at some examples, shall we? XLK to XLB. We looked at this before. It's time to finish up. We already know that it's currently in a column of X's. So it is in its direction is X. It's in a column of X's. What is the trend of this relative strength chart? Let's start to find our buy and sell signal. We start from the right and work our way left. Let's start with this column of X's where you see the green X. Is this column of X's above the previous column of X's? Nope. So we need to go back one column. Is this column of O's below the previous column of O's? Yep. So this would be in a negative trend, because the most recent signal was a sell signal. It doesn't matter that we're currently in a column of X's. The most recent signal we had was a sell signal. So we are in an X direction, positive direction, but negative trend. Or it's a sell signal on our point and figure chart. Let's go and do one more example. Let's do SPY to XLK. What would it be here? Again, we have our column on the far right, or I guess right. One of these days I'll remember that everything's mirrored when I motion in the camera. But on the right, we have our column of X's. So we are in a column of X's, short term. Our buy or sell, our positive or negative, is this column of X's above the previous column of X's? You betcha, we're in a positive trend. That's all there is to it. What's the current column? What's the most recent signal? Was the most recent thing that happened a column of X's above the previous column? If yes, positive. If the most recent trend was a column of O's below the previous column of O's, that's a sell signal or negative trend. One of the last things that we need to talk about here, before we can get into why all of this matters for the matrix, is this. As you're starting to look at relative strength, you might notice that XLK to XLE is, if I get my face out of the way, is not the same as XLE to XLK. Let's put some numbers to this so we can see this for real. XLK to XLE is going to be the price of XLK divided by the price of XLE times 100. Using two prices from the past, we would have 106.49 divided by 37.72 gives us 282.3. The price of XLE divided by the price of XLK times 100 is 35.42. They're not the same. But they're also not opposite when it comes to looking at a chart. And this is where things get a little, not difficult, but a little non-intuitive. It's not the first thing that you think of. Because if you think XLK to XLE is positive, or is X column and positive, you would expect the opposite, XLE to XLK, be column of O's and negative. But it's not. Here's an example of the chart for XLF to XLY. Let's do this one together. It is in a column of O's, so it is on a sell signal, or it is in a column of O's, so negative direction. And it is in a sell signal, because the most recent signal is a column of O's below the previous. So, column of O's, negative trend. At the exact same time, these charts were taken the same day, by the way. XLY to XLF, so discretionary to financials, was this. It's obvious this one is in a column of O's. But what's the most recent signal? The current column of O's is not below the previous column of O's. So we go one to the left. This column of X's is not above the previous column of X's. So we need to go one more to the left, where we see this column of O's is below this column of O's. So this one is also in the direction is O's, so downward direction, and negative trend. So XLF to XLY, column of O's, negative trend. XLY to XLF, column of O's, negative trend. Opposite charts, but the same exact answer. Pretty wild stuff, right? Claudio's asking a great question. When we finish comparing and finding the relative strength, What do you buy or sell? That's an amazing question. And the answer is, it depends. It depends on how you're using relative strength. And I want to really answer that in a lot more detail. And if you can just let me get through the last couple of slides, we can talk about exactly that. Because that's why relative strength matters, is how do we use it to invest? So bear with me. I promise you I will answer that question in a lot of detail in just a couple minutes. So now, how can we use relative strength? Well, if you've noticed, the matrix, it's its short name. Just like my name is Jonathan Stav, my friends call me John. The friends that I have from college call me Stav. You can imagine my mom's confusion when she starts talking to a bunch of my college friends. They're like, oh yeah, Stav's a great guy. And she's like, who? You mean my entire family? Yeah, no, my family's great, but my child is named Jonathan. Oh, you mean John? Yeah, that one. Get dragged away by my hair. So, the matrix is its nickname. Its full name is the relative strength matrix. All of those boxes that you see, every single colored box here is a relative strength chart. It is the answer to what are the signals on that chart. There's 132 of them on every single matrix. So right here, that's 132 relative strength charts. So if you ever wanted to know, can you make the matrix yourself? You can. You just need to do 132 of this. All right. SPY to XLY. Okay. So it's in a column of O's and it's on a buy signal. Okay. You've got to do that 132 times. That's why we do it for you. The numbers on the left side of the matrix, the big list of positive trend and X count, that's our long-term trend and our short-term direction. Where every time we do something on the matrix, we add up its X counts and its positive trends. Let's go and actually look at the matrix. Let's take SPY here, for example. Let's first look at how many charts are in a column of X's. And by the way, while we have talked about today, first we look at the direction, second we look at trend. The matrix is opposite. So the first letter is positive or negative, P or N, buy or sell signal. The second is the column, X or O. X's are going up, O's are going down. So let's start off by adding up all of the columns where we have a positive trend. 1, 2, 3, 4. 4 charts for SPY out of 11 are currently in a point and figure buy signal or a positive trend. That's where we get the number 4. Let's now look at how many columns or how many charts are in a column of X's. 1, 2, 3, 4. That's where we get that number. So this list of numbers on the left is adding up all of the good things for all of those relative strength charts. So SPY is compared to 11 different sectors. Oh, hey Melly, I hope you're feeling better. I'm so glad you could be here. So SPY has 4 charts where its trend is positive. It has 4 charts where its direction is X's. Adding that together, 4 plus 4, we get 8. Now, let's look a little bit further. Because now we can actually talk about some other uses for relative strength that isn't just making the matrix, it's using the matrix. So, let's now take a look. We're not going to get to the question of the day just yet. We just talked about how SPY can be compared to everything else, but the part that we care about here is the long-term trend, P or N, and the short-term direction, X or O. As this turns out, if we want to invest in a sector that has the strongest long-term strength, we want something that we can buy and hold for a long time. You might want to sort by positive trend and take the one with the highest positive trend count. Then you would sort it. If you click where it says positive trend, it will list it from the biggest to the smallest. So in this case, the sector ETFs that have the highest long-term strength is energy, then materials, staples, and real estate, then utilities, healthcare, discretionary, the S&P 500, financials, industrials, technology, and communications. That is a way to use relative strength charts. One chart, I'll talk about my answers to the question of the day, which are specific charts that are useful, but really the most value you can get out of relative strength is looking at a really big group so that you learn not just who's better than who, but you can compare the entire group. So positive trend is long-term strength. Short-term strength is our X count. Think about it. For short-term to change, all we need is for the column to reverse from X's to O's or O's to X's. For long-term strength change, we need a breakout or breakdown. We need to go above a resistance barrier or below a support barrier. That takes a lot more than just a bad day in the market. Well, I guess if the market's really bad, it could happen. But it takes a lot more. So that's an example of short-term strength, which is our X count, and long-term strength, which is our positive trend. And looking at this again, we can sort by X count to see exactly that. Staples has the highest short-term strength, utilities, real estate, and materials, then energy, industrials, discretionary, healthcare, so on and so forth. And if all you care about is knowing what the strongest overall sector is, you can add the positive trend and the X count to get the total. And when we look at the total, energy might be the leader for long-term strength. Staples might be the leader for short-term strength, but they are tied in overall strength. 132 charts is a lot, which is why for the matrix we do it automatically for you every single day. These charts change every single day, so the matrix is a nice picture of who the leaders are for short-term direction and long-term trend. Now to today's question of the day. What are some relative strength charts that you find useful to follow? We're not talking about the matrix here. We're keeping it simple. One relative strength chart. That's it. I have two answers, and I hope that this is a little bit more of a complete answer of how would you use this information. The two charts that I really enjoy following are SPY versus SPDN. This is SPY, the S&P 500 ETF, and the inverse ETF of SPY, which is going to be our bear shares. When SPY is in a column of X's, it has short-term strength over itself in the opposite direction. So this is how do you say, this is basically your, is the market bullish, trending upward, or bearish, trending downward? Short term, we can look at the column. So in this case, we're in a column of O's, which means that SPY is weak compared to the inverse of SPY. So the bears right now are winning short term. Long term, we see this column of O's is not below the previous. This column of X's is above the previous. So here, we are in a long-term positive trend. So the bears, the pessimists, the people, the glass half empty people, they're winning short term. The glass half full people are winning long term. That's a very useful gauge for if you're trying to look at one chart to say, how is the market today? Are people optimistic or are they pessimistic? That gives you that answer. Another one that I really enjoy following is SPY to RSP. SPY is the S&P 500, and RSP is also the S&P 500, with one difference. SPY is what's called market capitalization weighted. Some really big, ugly words to say the bigger the company, the more it matters. The bigger the hippo, the bigger the splash. RSP is a little different. Every company in the S&P 500, whether it's the biggest company or the smallest company, they all matter the same. So if the biggest company goes up by 5%, the smallest company goes down by 5%, SPY is probably going to go up by probably about like 4.8%. Because the big guy, the guy that went up by 5%, he matters so much more than the little guy. In RSP, up 5%, down 5%, they cancel out, everything's equal. So 0% change. Why is that chart useful? Because it tells us, keep in mind, the S&P 500 is 500 of the largest companies in the US stock market. But using the word little seems weird when we're still looking at the 500 largest, some of the 500 largest companies. But those little guys are still big companies and are still very valuable. So when SPY is beating RSP, that means the big guys are doing really well. Because if the big guys are doing well, they're pulling SPY up. While the little guys, they might still be doing well, but they could also be doing poorly. It gives us, SPY just tells us what's the value of the S&P 500. RSP tells us how many of those companies are performing well. Because the biggest company doing well and the smallest company doing poorly is the same as the smallest company doing well and the biggest company doing poorly. So when SPY is in a column of X's compared to RSP, that means the big guys are outperforming the slightly less big guys. When RSP is outperforming SPY, that means the little guys are outperforming the slightly smaller guys are outperforming the bigger guys. So that's my two charts that I enjoy looking at when it comes to relative strength. Yes, I also use the matrix. Yes, the matrix also has an incredible amount of information for if you want to just look to find the top sector so you can go look at companies within that sector, you might sort by overall. If you're trying to use a trading strategy with the matrix, you might only be looking at X count because you care about a sector that's doing well short term. If you're just trying to understand who's winning, the optimists or the pessimists, SPY to SPDN might help. And if you're trying to know, are the big guys or the slightly smaller guys doing better, SPY to RSP. But I want to hear from you what your favorite relative strength charts are as well. The more people we hear from, the more we know, and the more ways we find use for the information that we've learned here today. As a quick reminder to something that I talked about at the beginning of today's webinar, Julie Stav is coming back, and she's coming back with Sectors Made Simple to do a class series with us. Starting in May, Julie Stav is going to be doing a class series every other week where she's going to talk about trading strategies and using fake money portfolios that you will be able to join and use yourself. You'll get to test out all of these strategies in real time alongside her, and all of these webinars will be live so that you can ask questions directly and get answers right away. All of this is coming in May, starting in May rather, and is included for free for Sectors Made Simple subscribers. So if you are a Sectors Made Simple subscriber, congratulations, you're part of the classes. If you are not a Sectors Made Simple subscriber, there's never been a better time to join, because getting in for Sectors Made Simple now gives you access to all of our recorded webinars, all of our ongoing webinars every Tuesday for members, as well as these classes as they come out, both live and recorded classes alike. If you have any questions about purchasing a subscription or need help, feel free to email us at support@sectorsmadesimple.com. We're more than happy to help you. What time? Nothing is set in stone yet, but the plan is Wednesdays at 4 p.m. Los Angeles time, 7 p.m. Miami or New York time. So the same time as these webinars on Tuesdays and Fridays, we're going to be doing those classes every other Wednesday at 4 p.m. So the same time. So that's today's webinar, everyone. Thank you so much for joining us and bearing with my mic problems at the beginning. It's always a pleasure to get to review topics that are extremely important. This one especially is very useful for learning how to use the matrix simpler and knowing what all of these crazy letters mean, but more importantly, why they matter and how they help you to invest simpler. So thank you all so much for joining us here today. Have a great weekend, and we'll see you all very, very soon. Take care.